Welcome back to Mortgage 101, your guide to home ownership. We're happy to be on the air on CityNews in Halifax and CityNews in Ottawa. And we have lots to talk about. Just a reminder, our next segment after this one, we're going to talk about inflation and the Bank of Canada. And then we're going to wrap up the show talking about first-time home buyers. Clinton, that's exciting. And you said there's some controversy again in the some of your comments about first-time home buyers.
I mean, I like to be controversial. I think you need to have a line. You need to basically know where you stand, and you need to stick by it. So,
right.
We're all good.
And we have a guest, from what I understand. Is that correct?
We do have a guest.
Yes. You're getting the guest on the line, Aaron?
I have the guest on the line as we speak.
All right, why don't you introduce the guest?
Yeah, it is Chris Turcotte, president from Centum Financial Group. I think Chris should be here with us.
Chris, how you doing?
Hey, guys. Can you hear me?
We got you.
Not too bad. Can you hear me okay?
Yeah, we got you.
Excellent.
Can you hear us?
Yeah, Todd, we've done this face-to-face, haven't we?
We have. We've had the opportunity to meet. Does anybody ever call you La Presidente, by the way?
They have. But I got to say, buddy, we've met a few times, Todd, and doing this strictly over the phone line, I got to tell you, you've never looked better.
Oh, there you go. Rim shot.
I mean, who doesn't like a good zinger? Let's be honest.
All right,
nothing like coming at the guy that's calling the shots today. Todd, great to be with you. Clinton, thanks for the opportunity.
Right on. We're happy to see you. I'm going to let Clinton kind of lead this one because Clinton, you've got some questions that you're in the chamber ready to go for Chris,
and
right?
as our listeners know, we're just back fresh from Vancouver. Chris actually lives and works in Vancouver, and he oversees what's going on really across this country. Mm-hmm. I can speak to what's going on here in the market in Halifax,
sure,
but really what I want Chris's insight for is what's going on across this country. Because obviously, Chris, you're in all kinds of markets. You're talking to mortgage professionals and involved with the real estate business as well from across this country. So we really want to kind of give you the floor a little bit, and you can give us a little update on what's going on with the real estate market. I know it's a bit soft here in Halifax, but how is the rest of the country looking?
Yeah, thanks for going. And it's a great question that has kind of a two-prong answer, right? Like, obviously, the media does what it does best. And let's face it, talking about all the strengths at a time like this doesn't sell papers and doesn't make us tune in. Mm-hmm. So while there is, while there is a lot of doom and gloom, what we're seeing is if you're a homeowner and you're in a variable rate product, obviously your costs are potentially going up, and that's causing a little bit of nervousness. And I'll be the first to hop on a soapbox and echo anything Clinton. I'm quite certain Clinton said in the past. And it's more important than ever that you have an unbiased approach to what you should do for your mortgage. Going to the bank that you're currently with and asking for advice, you got to appreciate the fact, almost empathetically, but we're not going to start feeling sorry for the banks just yet. But you got to remember that the banks are going to look out for their best interest first and foremost at a time like this. So I just want to preface it by saying, if you're owning a home right now and you're in a variable rate product, yeah, there's probably a little bit of nervousness. But the market overall, aside of what we're reading in the headlines, and I can kind of say coast to coast, the market is still healthy and strong. Now, I'm not saying we're hitting record numbers. Obviously, we're not. But I think people kind of look past and they overlook the fact that, and I'm biased, and I'm obviously a proud Canadian, but if you look at the actual fundamentals of our market, we still have high demand, and Todd and Clinton, I'm sure you guys have covered this before. There's people that just are begging to get into the market, and they didn't have the opportunity when the market was crazy. So we still have high demand. And
would you say it's at 2019 levels? Would you say it's at 2019 levels, Chris? Like, where is the demand compared to where it's been the last couple of years? It's been like a breakneck amount of volume in 2020 and 2021, and really leading up to this time in 2022. Like, do you think it's back to a 2019 type level? Is that what you're seeing?
Well, what makes it interesting, I think what makes the demand so interesting is the other side of the coin, which is we have incredibly low supply right now. Mm-hmm. So while the demand might not be as high, the supply is uniquely low. So I think that's the thing is demand is still strong for those looking into the market, and the supply is still low. Labor shortages and increasing wages in the labor market is always a good sign. We still have an incredibly low national employment rate, and there's still a high demand in immigration, right? So things are all looking super positive, but of course, you've got to be smart, you've got to be conservative, and I think we're still going to see a price correction, because it doesn't matter. Despite all these things I've just said about an optimistic market, it doesn't change the fact that if rates have doubled, the prices must come down. But I still think that there's still people eagerly waiting to get into the market.
Chris, when it comes to housing, this issue is big in general. We know how what at a premium housing is in just across the country. So how is the real estate market, I guess, dealing with the housing, just so that people can have a place to live? I mean, this is there's this kind of a bit of a controversy now about a house as an investment, and there's that with the juxtaposition of it should fundamentally be a right for people. So how does the industry kind of balance that, or does it balance it, or is it maximize profit at all cost? What can you tell us about that, if that question makes sense to you?
Yeah, it does. I think there's a couple of different ways to come at it, Todd. I think first and foremost, now we know now is not the time you're going to exit the market and get that record cash out. Mm-hmm. I think that ship has obviously sailed. Where it gets most interesting, and in the limited time we have here today, I think the biggest thing we all have to be thinking about is a couple of fun facts. 78% of Canadians currently have a mortgage with an interest rate under 3%. Yeah. And it's no secret that I think we're looking at least 2 more rate increases, right? So rates are going to get quite high, and that's not going to correct overnight. So I think there's still, not to create some doom and gloom, but things that people need to be conscious of is I think there's going to be some real pain from payment increases, right? And it's not going to be corrected in the short term. So as you have 78% of homeowners in interest rates below 3%, well, guess what? Unfortunately, you've got to renew. And you're going to have to renew. There's a very good chance that you're going to renew into a higher than normal rate. And that's where things really, really get interesting. And then you combine that with the rising cost of living and inflation that just is absolutely relentless, right? So I think what you're going to see is obviously there's a cautionary tale, again, circling back to a mortgage professional, making sure you understand your options, because I think a lot of people don't appreciate the fact that they're going to come up for renewal and they may not qualify under their traditional terms. I think you're going to see some unique products come out into the marketplace. I think you're going to see a 40-year amortization again. I think banks will have no choice but to potentially offer a 40-year amortization upon renewal. Mm-hmm. I think you're going to see some creative purchasing products to re-stimulate the market again. Like Todd, I don't know if that exactly answers the question, but I think that I just think people need to be prepared for what this means to them as kind of a go forward.
Yeah, honestly, Chris, you hit on a really good point there. Yeah. I am less concerned about customers in an adjustable rate mortgage, because I think they do know that at some point we're going to be in a recession type situation and the rates will soften. Yeah. Who I'm really concerned about are these people that are in these ultra low fixed rates that are coming up for renewal in the next 12 to 18 months. So I think you kind of hit the nail in the coffin. Yeah. Chris, we're going to let you have the last word. I'm less concerned about what's going on here in Halifax based on, rates. I think that maybe we're a little bit more conservative here, and we don't have these, uber high mortgage amounts. Like our average mortgage, in Halifax is under $400,000. But what are you hearing and seeing in Toronto and Vancouver? They must be having tough times. We have only a few seconds left here.
Yeah, so I think there's a lot of concern there. We got to remember the default rate is still incredibly low. Like even last quarter, so we all expect those large markets are going to crash first, right? And there's going to be defaults and everything else. In Canada, we're still 0.16 of the default rate in Canada. Over the last decade, we've never been over 0.4. And just to put that in perspective for everyone in our closing seconds here, even if we got 10 times worse, which would be the end of days, 10 times worse, we would still not be at the current delinquency rate in the States that is currently 1.96. Wow. So I'd ask people to get out of the headlines, zoom out, take a breath, call a professional.
All right. Thanks, Chris. Appreciate it. Good stuff.